Hi, welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, March 24th. Today, as usual, we're going to take a look at the broader markets and see where did we close the week and beyond. We're going to take a look at some of the underlying sectors that are beginning to make moves. Also beyond that, sub-industry groups that are also on the move. And beginning, we will take a look at some of the headline news that drove price action last week, another volatile period. And then last up, viewer question of the week. And it's all about what to be on the lookout for relating to turnaround stocks, given the move down that we've seen in many areas of the market. So let's take a look at some of that economic data from last week. First up, the Federal Reserve officials did raise interest rates by 0.25%, and this was anticipated, not a big surprise there. However, what did move the markets on that Wednesday release were Fed Chair Powell comments where he signaled that the rate hike target is going to remain at that 5.1% level, and there is no chance of any lowering of rates this year. And in turn, we did see a sharp pullback in the afternoon hours on Wednesday. We'll take a look at that as well as price action beyond and before. Also, weekly jobless claims did increase only by a little, but it was moving in the right direction. Fed Chair Powell has repeatedly said that he is on the lookout for unemployment to increase in a way that showing the economy is slowing down and hence inflation as well. We also got numbers relating to durable goods orders, and they did fall. This is a nod toward the concept that business growth is slowing, and in turn, the economy could be heading toward a recession. Next week, very critical data is due to be released. It's the core PCE, that's the personal consumption expenditures number, another very important metric relating to inflation, what direction it may or may not be heading. Of interest will be whether the market responds and how, given Fed Chair Powell's comments and the fact that it is on the table that we will not see any more increases in interest rates. So from here, let's go ahead and take a look at the markets and see where we closed for the week. And here we are with a daily price chart of the S&P 500. And this is that Wednesday decline that I talked about before we were heading into that Wednesday FOMC meeting comments. In a bit of an uptrend, the markets were trending higher. We did see the S&P trade above this key 50-day simple moving average, but that late day pullback pushed it back below to the point where, as the markets continued throughout the rest of the week, we did see a dip below each of these moving averages on Friday. However, there was a late day rally where it recovered. So if we do see a continuation or a move and a close below these key moving averages, we will be looking to the mid-March period as the next area of possible support for the S&P 500. But certainly most critical is that it did find upside resistance. The RSI, that's your relative strength indicator, in negative territory. And then stochastics trending into positive territory, a bit mixed, but I'm more focused on that RSI, so negative overall on the NASDAQ. Let's take a quick look at that's the S&P. Let's take a quick look at the NASDAQ here. Daily price chart view, and it's in much better shape. It has moved and continues to trade above each of its moving averages. That RSI in positive territory, trending higher, likewise with the stochastics. So all systems pretty much go with the NASDAQ. However, investors, you do need to be aware of overall broader market sentiment, and for me, I am still very cautious. This move into the NASDAQ is very focused, and ideally you will want to see a broader participation in the markets to indicate that we could see a whole lot more in the way of upside. So let's go ahead and take a look at the underlying 11 sectors in the S&P 500. This is a 2-month daily price chart view, and it is strength to weakness. I've sorted it that way, and it's a very slow moving rotation as it relates to these groups. They're not going to whip around with this view, but I did want to highlight the fact that technology is remaining up here at the forefront. The industry group was up 1.8%, only a little more than the NASDAQ, but a nice continuation of its uptrend into a base breakout. We can see the momentum is positive. And of note is the fact that within technology, the two most heavy-weighted names in that group are Microsoft and Apple. It comprises 40%. Both stocks are looking quite attractive now. And then from here, communication services, XLC, a nice continuation rally there. Also, take a look at that MACD just entering into positive territory. This is all about Netflix and Alphabet. Those are the two heavyweights here. And again, that nice upside rally continuing to take shape as those mega cap, formerly known as FANG stocks, continue to overall outperform the markets. So new to this upper quartile here are and is consumer staples. We can see healthcare up here and utilities. And of course, these are defensive areas of the market. They fared the best on Friday. But of these three sectors, XLP, the consumer staples, is the only one that has a positive chart on the daily. You can see it's broken back above each of its moving averages. The momentum's not really there. It's kind of waffling, but there are a couple of names of interest there, higher yielding names that are faring well, Campbell Soup and the such. So of note, for those of you looking to perhaps buffer your portfolio with some of these more defensive areas, healthcare was up not as much as the markets, and it still remains in a downtrend. However, there is one area that's starting to firm up. I'll share that with you as we move forward within the healthcare sector. And then, of course, on the weaker side, we can see that financials continue to deteriorate. They were flat for the week, but overall very much in a continued downtrend there. From here, we can take a look at real estate. This is another area. This is REIT stocks, and they are very much in a confirmed downtrend. When we have a period where we are seeing a credit crunch, or certainly less in the way of lending, you will see these real estate stocks suffer. From here, let's go ahead and take a look at some of the other more refined areas of the market. I use ETFs that are super helpful in doing that. Again, 2-month daily price chart view with that RSI. Go look up here at the forefront. Gold is continuing to find buyers. This is that safe haven play in light of the fragility that's being shown in that banking industry. Gold stocks were flat for the week, but that uptrend very much remains firmly in place. From here, we can take a look at some of these growthier areas that are driving technology. First up here are software stocks. I talked about Microsoft, and that particular name was actually flat for the week, but there are other areas that are showing pockets of strength. So we can see the uptrend remains in place for these software stocks that were up in line with the NASDAQ. Let's go ahead and take a look at semiconductors, another strong area here, relatively, of course, and the semiconductor group was up a little less than 1%, but again, remains in that nice uptrend, forming this nice right side of a base into a breakout with your outside momentum in positive territory. I talked about an area that is firming up within healthcare, still quite early, but worth putting on your radar, and that is biotech stocks. IBB, the overall group was up a little more than 1%, but what is of interest to me is we have this higher low that is potentially shaping up here. Your momentum is not there yet. I'm going to need to see more upside price action in this MACD, have it get up above that net neutral zero. Likewise, with that RSI, getting up above that 50 would make it more interesting. But of most interest is if we see a renewed interest in these biotech stocks, it will signal that an appetite for risk on type of names has come back in. So we are still very, very early, but certainly keeping an eye on that particular area. So from here, let's go ahead and take a look at volatility, because this is also known as that fear index. And we can see that the index did close the week at about 22. Ideally, we want it to be in that 16 to 18 range to indicate that investors are more settled. So it is still elevated, but the good news is that it closed below that 200-day simple moving average. So from here, what we can do is be on the lookout for a more decisive move, ideally back down to these lower areas so that the markets can get on firmer footing. So moving on to viewer question of the week, and it's all about how you can identify whether a particular stock or group is actually reversing its downtrend. So what I will do from here is go ahead and share some reversals attempts or names that were on my watch list that are not following through in their potential downtrend reversal. First up here is Uber, U-B-E-R, and the company rallied ahead of very strong earnings with management guiding higher. The stock hit a near-term high, super high volume, and on this pullback, I was on the lookout for Uber to potentially find support at this 50-day simple moving average and then potentially trend higher with an eye toward reaching this former high. Now, what we can see has taken place since then is what I would call a downtrend reversal attempt failure, because Uber has closed back below that 50-day simple moving average, and in so doing has pushed this MACD into negative territory. Likewise, with that relative strength, it never really got positive. That was what I was on the lookout for. I move above these moving averages, get that momentum into positive territory, did not take shape. So another example of a possible turnaround attempt, and a name that certainly was on my watch list, was Airbnb. This is another company that came out with very strong numbers, management guiding higher, gapped up, and then fizzled. Now, since then, we are still finding support at that 50-day, so that's the good news. But in order for this to be a pullback into an uptrend, I will need to see a move back above this 10 and 21-day simple moving average, get that momentum, the RSI, and have that MACD black line cross up through the red, and that would indicate that the downtrend has in fact reversed. You will also want to see that take shape on volume. From here, we can take a look at another name that is really faltering here, and we are seeing hotel vacancy rates increase. So this is Hilton, HLT, very strong numbers here. The stock had been in a very confirmed uptrend, and from here we can see that it has broken below support. But most importantly here is that the momentum is now in negative territory. As far as what we will need to see to identify a possible downtrend reversal is a move of that momentum into positive territory. So I'm highlighting those characteristics here, and then also want to highlight for you some of the other characteristics that will need to take shape in addition, and that is a move above the moving averages here that we can see that took place, and then nice high volume on those rally days. So at this point in time, the downtrend in HLT is remaining in place. And from here, let's go ahead and take a look at a downtrend reversal that did work or did take shape, so that you can be on alert as it relates to what to be on the lookout for. This is Adobe, and the stock did fall. This is certainly in February. We did see the broader markets deteriorate, but what took place here is ADBE announced earnings. We saw a gap up. Let's take a look. I'll highlight some of those characteristics that were telling as it relates to pushing ADBE into an uptrend. First up is those high volume bars on the rally days. Here's that gap up, not ready for prime time, but once we break above these moving averages, we get that momentum into positive territory. The stock is in a new confirmed uptrend. That's it for this week. Everybody have a fantastic weekend, and I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.